Next question, 16 number, for 6 to 8 marks in the exam. So why I am taking this question? Because they have asked in the exam in intermediate level, okay? And on your own, for a first time reader, it is difficult to clear this question. So let us see interesting question number 16. A Limited has a total sale of 3.2 crores and its average collection period is 90 days. What is the sale? 3.2 crore. Average collection period is 90 days. So 90 days means, for simplicity we can assume 3 months. Okay. So what is your average debtor balance? Average debtor balance. Annual sale is 3.2 crore. Average collection period is 3 months. So what is your debtor balance? हाँ बोलो fast. 1.06. See, it's better you tell me, sir, please stop the batch. We are not interested. I will happily stop. 0.26. Are you really serious about your exams? 90 days divided by 360 days into 3.2 crore is 80 lakh. Three by 12 into 3.2 crore. From where you are getting 0.20, 0.31, etc., etc. Purposefully, I know you want to irritate me. Yes or no? I know. And you were succeeded. After completing the chapter, the last problem, annual sale is 3.2 crore. Collection period is 90 days. And I'm telling you take 3 months. I'm giving you the instruction, take 3 months. And you are not willing to answer only. See, it's very difficult. I will not teach you. The past experience indicates that bad debts are 1.5% of sale. So this company is right now managing its own debtor. So when you are managing your own debtor, bad debts are 1.5% on sale. I will not ask you. I will answer myself. 3.2 crore into 1.5%. So your existing bad debt will be 48 lakh. Yes or no? Where is my calculator? I don't have. I'll use my... No, I will not ask you. See, I will go into depression mode one day and then I will have to be admitted in some hospital. 4,80,000. Is this lady right? Let me check. 3 crore 20 lakh. Just by paying some few thousand rupees, you joined intermediate. 4,80,000 is right. The expenditure incurred by the firm in administering its receivable collection efforts are 5 lakh. Good. One figure they have given. A factor is prepared. A factor is prepared to buy. Prepared to buy. Underline. Prepared to buy means all risk of bad debt will also be borne by the factor now. A factor is prepared to buy. He says, give me all your debtors. Factor is prepared to buy the firm's receivable by charging 2% commission. The factor will pay advance. Factor will pay, such a nice factor. He will give you amount in advance only on receivable to the firm at an interest rate of 18% per annum, after withholding 10% as reserve. So he will not give you advance equal to 100% of the invoice. He will give you advance. First he will keep 10% separate. He will say that I will only give you 90%. The reason is that sometimes there can be sales return, there can be dispute, bad debt, Okay. And therefore he will not be able to collect the entire amount, and therefore such companies, what they do, they finance only up to say 80 or 90% of the invoice. In this example, they are financing only 90% of the invoice. Calculate, now see the question, the effective cost per annum. Calculate the effective cost per annum of the factoring to the firm. Now there are two cost and two benefit. There are cost are interest cost and commission, which you have to calculate, and benefits are your bad debt will be eliminated now because you don't have to bear the bad debt risk, factor will buy. And second, your administration cost 5 lakh you don't have to incur, it's written administration expenditure will be reduced now, because factor will not take all the responsibility of collection, bad debt. So you have to add interest plus commission minus bad debt minus administration cost. That is called effective cost. That is called, and then you have to convert into per annum in percentage. We'll write both in rupees also, in percentage. Why we need to write in percentage? Suppose this comes to 20%, suppose only. We can compare it with other options available in the market. Bank overdraft is available at say 18% only. Then in spite of everything, I'll go with bank overdraft option because that will cost me less. Is it right? But if the bank overdraft is 24%, I will go with factor. Is it right? So that is why, as a student of finance, you should be able to compare various options using their effective cost in percentage per annum. Using their effective cost in percentage per annum, so that you can decide which option is better for you. If you have to borrow money, the one which is lower is better. Okay. Now we have to convert this question into an answer. Okay. What is the average collection period? 90 days. So can you calculate sales made in 90 days? 90 by 360 into 3.2 crore, 80 lakh. So a quarterly sale is 80 lakh. In a quarter, the invoice of 80 lakh rupees is generated. In a quarter, invoice of rupees 80 lakh is generated. Will the factor give you 80 lakh rupees advance? Say no. 20% only. But your question is not over. Effective cost of factoring to the firm if interest and commission are collected upfront. Interest and commission are collected upfront. What is upfront? Upfront means in advance. Upfront means coaching fees is collected upfront, in advance. Pendrive cost is recovered from the student upfront, in advance. Your hostel fees is collected upfront, right? And you have learned upfront collection in your 11th standard only, bill discounting. When you go to discount a bill, what bank does? It calculates the interest for that period, deducts from the bill, pays you the remaining amount. That is called upfront. Factors also do the same thing. Factor says, I will pay you the money by deducting my charges. Is it right? So therefore, I will have to compute what is the net amount that will be advanced by the factor. What is the net amount that will be advanced by the factors in a quarter? Factor will give you advance equal to 80 lakh minus 10%, 72 lakh, minus commission and interest, minus commission and, because commission and interest will be collected upfront. Collection of interest and commission is upfront, so that will also be deducted. Remember bill discounting from your 12 standard accounts. Bill amount is 1 lakh, 10% is the discount rate, time is 6 months. What you have done? You have computed the interest for that 6 months, deducted from the bill, and you passed an entry: bank account debit 94,000, discount charges 6,000, to bills receivable 1 lakh. Now similarly in this case also it happens. Company will receive funds from the factor net amount only. Is it right? So first we'll write a small working note 1. Now I will not ask you any question. Calculation of net amount advanced by the factor. Calculation of net amount advanced by the factor. Calculation of net amount advanced by the factor. So I have given you enough hint. First you write down annual sale 3 crore 20 lakh. Then write down average debtor. Average debtor proportionate. The whole batch is over. And then you give us such a wrong answer. 90 by 360. Can we take 365? You are most welcome. But then you manage the remaining answer yourself. Okay. For simplicity, can't we assume 360 days so that you get a complete whole number 80 lakh rupees here? Okay. And that is also a quarter's sale. Can I say that? In 3 months, how much sales takes place? 80 lakh. How much debtors are generated? 80 lakh. But this factor is smart. He says, we will not give you full amount of advance. We will give you 10% less. So that is called factor reserve. 10% of 80 lakh, 8 lakh. So what is the commission also will calculate. Commission to the factor for 1 quarter. For 1 quarter. In a quarter, sales of 80 lakhs takes place. So factor will charge in 1 quarter 1,60,000. Now you write down amount available for advance. Amount available for advance 80 lakh minus 8 lakh minus 1,60,000. You put this in bracket also and you write the formula both. So company should get an advance of 70,40,000. Respect the question. Commission is collected upfront. Commission is collected upfront. Means they will deduct commission and then give you the advance. But in this question they have also mentioned interest is also collected in advance. So interest will also be deducted. Less interest. Less interest. Take this number. Interest for 1 quarter, write in bracket. Interest for 1 quarter. Take 70,40,000 into 18%. 18% is your interest rate. Into 90 by 360. Very good. 3,16,800. If the question says, see, listen to me, commission is collected upfront, interest will be collected later, then your answer will stop here. But if the question says commission and interest both will be collected upfront, then you have to calculate interest and deduct it from this amount. So finally, what is the amount the factor will advance to you? 67 lakh 23,200. Is it right? If they ask you what is the net amount advanced by the factor, write this. Some more discussion. The student will ask, can I deduct interest first and then I deduct commission here? No. Interest will be collected only after all other deductions have been made. Is it right? Otherwise, unnecessarily you will be paying interest on that amount also, which you are never going to receive. Can we take commission before reserve? Sometimes I wonder, are you serious about your query? Are you serious about your query? First tell me yes or no. Say yes. Does it matter? Amount of commission will change. Oh, you have raised a different question. That is a good question. Writing this here or this here will not make any difference. Commission is always calculated on sales. Factor will have to take efforts to recover 80 lakh. Is it right? He is going to go to each and every customer and recover the amount. He is not going to go to 90% of the customer to recover the amount. Will he go to 90%? 100%. 10% is only is just playing safe. He's not giving that much amount of advance because he knows some customer might do the sales return. So by not giving an advance of 10% is playing safe, but he has to take efforts to collect entire 80 lakh rupees. He has to go to each and every customer, knock, knock, please pay, please pay. So he will charge you commission on 80 lakh. So whether you want to write here or here, it is going to give you the same answer. Of course, your collection will, commission will be this amount only. This will not change. Is it right? Think you are a factor. Instead of 90%, suppose I make it 50-50. But commission will be calculated on the full amount only. Because you will say, I have to recover every amount. Okay. So now your answer is 67,23,200. So this does not matter whether you write this here or this here, but amount should be the same. These two figures cannot be changed. But if you write interest before commission, then interest figure will change. Because interest is linked to the amount advanced. Therefore, interest will come at the end. Hello? Interest will come at the end. If the question says, commission is collected upfront, interest is collected later, then don't deduct interest here. Is it? Of course, interest will be a part of cost, but the amount of advance will be 70 lakh 40,000. In some exam, what they have done, they have said interest will be collected upfront, commission will be collected later. Then what I'll do? Then I will write interest here, and I will calculate interest on 72 lakh. Is it right? So you should be smart enough to change this first answer according to question. If interest and commission both are collected upfront, this is the answer. Commission is collected upfront, interest is collected later, your answer will be up to point E. If interest is collected upfront, then interest will be calculated on 72 lakh. Okay. Any query? Now this calculation gives you cost of 1 quarter. So write down step number 2. Step number 2, write down cost per quarter. First you do calculation for a quarter, that will be easier for you. Calculation of cost per quarter. Right hand side, rupees. So as I said, there are two costs, there are two benefits. Cost number A, commission. Cost number A, commission. 1,60,000. Cost number B, interest. 3,16,000 800. So total cost is outer column 4 lakh है जी 76,800. So if you appoint a factor, you have to pay him 4,76,800 in a quarter. But point number C, less benefit. When you are using the word effective, means if there is any side benefit, that also will be considered. So what are the two benefits I will consider here? One, right below A, or one, bad debts. So what will be the bad debts which we will incur in one quarter? 1.5% of sale. 1.5% of sale. How much? 1.5% of 80 lakh. 1.5% of 80 lakh. We are doing calculation for a quarter. Sales in a quarter is 80 lakh. 1,20,000. Sometimes you're right. B, administration cost yearly is 5 lakh. Divide by 4. So per quarter administration cost is 1,25,000. Very good. So the total cost we are going to save is 2,45,000. When they are asking you effective cost, any other side benefit will also be considered. So my point number D will be cost per quarter. Cost per quarter. B minus C. A plus B minus C. 231,800. Now think carefully. If you have a doubt, you can ask me. 231,800 is right. It is now like asking a simple question, which I am not going to ask you, of course, that you are incurring 231,800 on an advance of 67,23,200. Is it right? Simple calculation. You have borrowed from me 67,23,200 and you paid me 2,31,800. What is the rate of return you have paid me for 3 months? So I will do myself. 231,800 divide by 6,723,200 equal to into 100. 3.48%, around 3.447%. So you are incurring a cost of 3.447% for a quarter. For a multiply by 4 will give you per annum 13.79%. Is it right? So my answer is 13.79%. Those who have completed step 2, write step 3. Effective cost in percentage. Step 3 is very easy. Very few books contain the answer properly, and very few teachers take the risk of solving such question also. Effective cost in percentage, because students normally don't like such teacher who give them challenge. They want entertainment. Sorry, I can't provide you. Effective cost in percentage per quarter. Per quarter will be, tell me that previous answer. It was 231,800 divide by, first write complete calculation, into 100. 3.447% is your cost of 1 quarter. Is your cost of 1 quarter. It's like you're paying this much interest for using the money for 1 quarter. Okay. And then step 4 will be effective cost per annum. Effective cost per annum. So 3.447 into 4 quarters. So that comes to 13.79%. 13.79% per annum. Okay. This answer is over. Only with practice you'll be able to get it right. Done. Now this chapter is over. One paragraph was your homework. Which paragraph? Which paragraph? 12 number. One page you will read. You'll find time. Yes.